In this presentation, I am going to show you how our option strategy software look like. So once you open the software, this will have a login panel. So by clicking here, you can able to log in. And the time to time, I used to give specific option strategy for the buyer of this software. So that will be whenever it will be given, the date will be given here, and the strategy details will also be given here, and how many days you need to hold, what is the loss risk in this, and what is the profit potentiality in this. Everything will be given in this particular software. And once you log in, you will broadly see three sections here. First is the strategies which we have formed for the users, and second section of the strategies you can say which are user can initiate, and one third section of strategies which we have formed uh, for calendar spread, to forming the calendar spread, cross calendar spread for that. So all these strategies, whatever is given in the left one and right one side, this theoretical description of these strategies are already given in my book. So I'll just show one by one how we can go with the strategies. So here, just if you click on this 5 by 2 spread strategy. So what is this strategy? How to initiate this strategy? So this strategy theoretical prospect is being given here. So Nifty spot is quoting at this one 2500, and if someone is going to initiate this strategy, so you have to buy 5 lots of out of money call option and sell 2 lots of out of money call option, and buy 1 lot of in the money put option. So this is how it is 5 by 2 call with upper strike put, that strategy is meaning. So this is the theoretical view why this strategy is being taken and what is the basis of taking this strategy. Everything you will find in the book which is coming with this particular book, product. But how this software helps you, you can say once you load the symbol here, and if you go for the load data section, so it will put all data which is required for initiating this strategy. So different combination it will form, and what combination is having what kind of profitability and liability, that also it will show. So whenever the data load will be successful, it will show that data load is successful, or else it will show the data load is failure. So here imagine I am just going to select some 5 call options, and I am selecting it from 300, 400, 500, 600 and 700. 5 strikes I have chosen here. So 5 different combinations I am going to form, 3 to 4 combinations I am going to form. Same way I will be forming some put options also I will be selecting. So I need in the money put options. So I will be selecting 8500, 8600 and 550, 450, 400. So if this is the combination I form, and I'm just going for 5 here. So mismatch strike it is showing 8700 we do not have. So you can just, I can take it out, whichever is not there. 550 I can say, 450 I can take, so 350 I can take, 300 I'll take it out. So 8350, 400, 450, 550, 500 and 600. So these are the strikes I have taken. So here I have chosen 8600, 8550, 8500, 450 and 400. So 350 also I'll take it out. Now I'll just do the calculation here. So 5 different strikes I have chosen in call and put, and this is how it will be. 5 lots I am buying out of money call option, 2 lots I am selling out of money call option, and 1 in the money put option I am buying. So this is what the strategy says. But if you are forming the combination in this order, 8,400, if we are selling 2 lots, and 8,450 if you are buying 5 lots, along with 8,400 put if you are buying 1 lot, then our net investment is 6,892. At 8,524 we will have the profit of 1,500. Like this way, 8,700 we have 10,300 profit. If the strategy fail and fall down to 8,237, we will have a loss of 5,000. So different strikes, different combination it has formed. So this is what it is saying. So how many lots of which this is the corresponding to call, and this is corresponding to put, and how many lots you have to buy. B stands for buy, S stands for sell. So how many lots you will be buying and selling, that is being given in terms of digit. So this is the strategy which I authored in my book and which you are going to get in the part of this product. So similar way we can form many other strategies also. So certain strategies you have to give the data, and certain strategies you have, it will automatically take that thing. Like here, Bank Nifty I have chosen. I'll just go for a load data, and I am just going to covered call with a 5/2 put, and this is the technique I am going to explain. So similar way, this technique 21, 20, all things are there. So this techniques, what is the technique? It is given in that book. Here also it is mentioned. What is the technique, what it is buying and what it is selling. So if you just give number of days you wish to form this strategy and hit on the calculate, it is work as a scanner, and it will do all the calculations, and it will form different pairs. It is telling that if you are forming 8,600 call option 1 lot sell, and along with if you are buying the future 1 lot, selling a call option, selling, and along with that selling 2 put options and buying 5 lots of put option of this respective strikes, then your net investment with the future purchase is 4,70,000, and at 18,730 you will have this 2,300 profit. So similar way, if you are falling down to 17,800, you will have 19,000 rupees as a profit. So this is how it is calculating, and it is, you have to see that which strike pairs are having lowest risk and the highest profitability. If you just see 18,600 call option, 18,500 put option and 18,700 put option, this combination is having a maximum liability of 2,000 here, and it has a maximum rewarding potential of 19,000. All other combination having a lesser profitability, and equally also its means liability also will vary. So this is on the strategies which I have formed and we have programmed. Like this way, 22 strategies which is being formed by me and it is being programmed is given in this section. So you may be forming some strategy according to your need. So suppose you want to form a delta neutral, vega neutral and theta neutral. That time you need to take the combinations according to your use. So for that, this is the user action strategy you can form. So we have given a features like user action option strategy analysis, same way save and compare, manual option strategy, user defined calendar strategy. These 4 segments we have given. So here say first segment I am taking, and you will just go for the load data. All the data will be get loaded. And once the data is got loaded, you have a Greek scanner, scan the Greek. It will tell you what are the tradable strikes are there and what is that Greek. Suppose I want to form a delta neutral with future long in the Nifty, then I need one put option. So Nifty is around 8,500. I am getting that, yes, 8,450 put option or 8,400 put option, which is having a delta of minus 2479. Suppose if I want to form a delta 0, so I'll go along in this order. So I have a Greek scanner, I found out I will be buying one future and simultaneously put options of 8400, which is having minus 0.24. So 4 lots if I am getting, it is going for delta neutral. So 5 days if I am telling to hold. So it will tell me at what level how much losses I will get, how much profit I will get, and it is delta 0. And net Greek, what I am deriving also, it will say that 0.07 is the net delta now. So at this particular time when I am initiating the strategy, and once the strategy will move towards the 8700, how delta will vary, and once the strategy is going to fall towards 8237, how the delta is going to vary. So that calculations you will get in the net Greek analysis. Greek scanner will give you the all tradable strikes delta, gamma, vega, theta, omega and IV. By watching that you can form any Greek neutral strategy, and it has a trend analyzer. By clicking that you can find out during 1 month what are the cycles are there for trend analysis, and during 1 week also what is the cycles of their trend, and what is the consolidation band. So every cycle will be having a uptrend price trends, and it will have a consolidation band. So whatever the strategy you form, if you just click on that particular consolidation band or that particular uptrend price points or downtrend price points, you will come to know how much profit loss this particular strategy will give in those price points. So that feature also we have added here. Any kind of 5-leg option strategy you can form. So this is 5-leg means this is one, and besides that 5 different options you can use. So any kind of complex option strategies with the call put combination, whatever may be the combination, you can give and you can form that particular option strategy. So this is about the user option strategy. Sometimes you may require to save and compare option strategy. So imagine sometime you have formed some specific strategy and that has particular Greeks and other things, and after 4 or 5 days you wish to know what is the Greek now, how I can go for one means re-evaluation. Suppose I have formed one option Bank Nifty strategy. So this is the thing I have taken when the Bank Nifty was at 8,425, 19,000 call option was 157, 19,500 call option at 60, and 17,500 put option at 123. Say this was 5 days back I have taken. So that time if I just go for a net Greek analysis, that time my Greeks was 0.95 delta I have taken. So what that same strategy is giving now? So that is important for me now. So if it has a net profit and analysis also. So how much profit this strategy is having at different level, that time it has shown. Suppose I wish to test that what is the delta is now. I have taken it 7 days back. Now 5 days are over. Now I need to see how much delta it is having now, so that I can have some particular adjustment in that. So for that again I can load that same strategy. So here I'll be loading the values here, and once it is loaded, so I'll be loading this profile, and then I'll be what I did here. So I have just sold 1900 call option. So call option 19,000 I have sold 2 lots, and I have bought 19,500 call option, bought 12 lots along with 17,500 put option. I have bought one lot. So this I have initiated 7 days back, 5 days back. So currently this is the premium. 5 days back it was having this premium. So if I just go for a calculate, this was having my profit and loss analysis at that particular time, and if I go for the net Greek analysis, this was Greek that particular time 0.76. So currently what is the Greek? Suppose if I am going for net Greek analysis, so I'll just go for calculate number of days. Now I'll have 2 days. I'll calculate. So then this profit and loss is not much important for for me. So and I'm going for a net Greek analysis here. So this Greek analysis, what I am seeing here, so at 18,620 now it is 0.54. When I have initiated this one, when I have initiated this strategy 7 days back, that time the profit and loss was different. So that time the profit and loss was different, and that time also Greek was different. So when I have initiated this particular strategy, that time 0.76 was the net delta, and currently if I'll take the current price into account at 18,620, so my Greek is having 0.54. So I can add any one strategy, any one lot here and bring it to that delta which I was having before, and I can continue holding for 2 more days. So every day basis you can check out the strategies delta in the last hour of your trade, and simultaneously you can balance that delta with the mismatch percentage. So that is also that kind of adjustment you can do by using this particular strategy. So using that particular tool you can able to do this, but this save and compare of some strategy has that feature by means of which you can just form a strategy, save it, and after every day sequence you can recheck and balance your Greeks accordingly. Now there is other factor also we have given here, manual option strategy. Certain times what happens, you need to form the strategy based on your requirement. Imagine I am just buying the Bank Nifty, say 18,620, action buy. I am buying one lot. So this is one lot, and volatility of this one currently is 14%. And say along with I am buying put option of 18,000 put option. Suppose I am buying 4 lots at the price of say 92 rupees, and currently the IV is 10.5%. I am expecting the 5% it can go up or 5% it can fall down in the coming few days. Then if I just go for calculate here, it is saying that how many calendar days I have left till expiry. So December, I am just making it December 24th, my expiry is there. So I am having, today is the 8th, so 24 minus 8, I am having 16 days till expiry. So I'll give 16 days till expiry. I'm going to hold it for 3 days, and lot size is 25 for Bank Nifty, and I wish to see these things at a target of, you can say, 19,000 level, or I want to see this thing at say 18,200 level. So if I just go for this thing and go for analysis, it will tell me currently at 8,620 level I have a net investment including the future buy. So future buy means 25 into 18,620, I will have some 4 lakhs and odd, and this put option, so I have net exposure of 4 lakhs and 74,700. So here at buy entry price and target 1, target 2, target 3, target 4, my losses and profitability is explained here. And when I will come down here, so I will see in the down move how my profitability and liability is moving in this. If IV increases, if the implied volatility increases by 5%, then how my profit and the loss will be charted here. And if the IV decreases by 5%, then how my profitability and liability is going to be impacted on this particular strategy in the coming 3 days. So here, these two also you can get a net Greek here. So what is the Greek we are taking? That also you can able to put it here. And so once you click here, so it will ask you how many days are left till expiry and number of days you wish to hold, calendar dates and market lot and all things. So whatever the strategy you are forming in automated action, same thing you can put it in a manual action by giving your data into that. So you can form the calendar strategy also. So any kind of calendar strategy, cross calendar strategy also you can able to form. So imagine, suppose if I am going to form a calendar strategy. Calendar strategy means I can buy this month and sell next month, or I can sell this month and buy the next month. That kind of strategy I can form. I can form diagonal calendar spread. I can form vertical calendar spread. I can form horizontal calendar spread. Any kind of things I can form. Suppose if this is for the current month, December, and suppose I am buying a call option of 8,500 and having IV and other things here, one lot. I am selling a call option of 8,700, say, so equal almost to 78, number of lot, one lot. So I am holding it for 10 days. So how my profit loss will be formed here? So it is telling that my net investment is only 160 rupees. However, if the Nifty fall down to 8,184, I'll have 160 rupees profit. Or if Nifty goes to 8,800, I'll have 300 rupees profit in this particular band. Whatever the losses at different level, it is giving me. I can also have similar kind of strategy, same 8,500 call option I am selling for next month and buying for December, selling for January. In that case, how much profitability and liability I will get, that also focuses here. In a downtrend, I will have maximum 2,300. In an uptrend at 8,800, I will have 1,700 profitability. So I can think of selling this month and buying the next month also. So there also I can find out how much profitability, liability I am getting in the calendar spread. So this is user defined calendar spreads. Similarly, we have specific strategies I have formed. Cross calendar spread you can form, net bull bear spread you can form. So like this November, you are current month you are buying and the next month you are selling. So in that kind of situation, what will happen? So this is the user defined strategy which I have given in my book on futures and options, which is part of this product. So the detailed analysis of that strategy is written there. But what you can do in this particular simulator, so data you have loaded, so you just go for one 5/2 calendar spread call option. So this technique, so it will form four different pairs, and it is net investment and its profit and loss potentiality, everything it will show to you. So it is saying that if you are December 8,500, 5 lots you are buying, January 8,500, 2 lots you are selling, your net investment is 650. If the Nifty goes to 8,700 level, you are having 7,000 profit. If 8,200 level, you are having some 3,676 rupees loss. So profit and loss level you can find out. Similar way, if you want to form with the put options, that also you can just select this technique and just have a calculate. So it will tell you different put options combination, what kind of values you can get it here. So this is how you can trade in the strategy analysis with calendar spreads. So cross calendar spreads also you can form. Cross calendar spreads also you can form here. So you need to just select the symbol and just need to load the data. Both the things it will be get loaded, and different simulations it can form. So 5 days and just insufficient data in the Bank Nifty. Bank Nifty doesn't have sufficient data for December and January, so we'll shift it to the Nifty. So whenever you do not have sufficient data to form 3-4 different combination, you will get this kind of error. So I'll just hit here. So you will get this particular analysis for the cross calendar bull and bear spread. So every pair, what are the actions you need to initiate? Like which one you have to buy, how many lots you have to buy, and which one you have to sell, how many lots you have to sell. So that also is being given here. So cross calendar bull and bear spread. So this is also by this process itself it will tell you this is the trade you are initiating. January 1 lot you are selling, December 1 lot you are buying. By this process you are investing 2,375, and once the price will move to 8,700 level, you are making a loss, and once the price is moving to 8,200 level, you are making some profit. So this every process, and if these levels happen in the coming 5 days period, it is going to impact you in that order. So this is how you can form the cross calendar bull and bear spread. So broadly it has 22 option strategy which is being authored by me, and 22 option strategy which is being authored by me, and it has user action strategies where you can initiate the strategy of your own using this particular tool. So this is all about the strategy formation tool, and also you are going to get the some of the strategies which I used to flag in this particular software. Monthly 1 or 2 strategies which you can take the benefit of this particular with this particular tool. So if you are a buyer, you are getting that particular benefit of this tool.